Hello everyone and welcome back to our YouTube channel. Today we are going to continue our previous subject, which is how to trade using RSI. But we will use a different technique, which is the divergence. Yesterday we have used the overbought and oversold technique. Today we are going to change it to divergence and show you a different way to benefit from such an indicator. Please do not forget to like and share our videos and subscribe to our YouTube channel. Let's start our lesson. What is a divergence? Usually the market, when it shows higher highs or trending to the upside, the oscillator does the same. Okay, so it replicates the movements of the price of a certain asset. If it goes to the downside as well, most of the time, the prices or the values of the oscillator, it move to the downside. An oscillator, in our case here, is the RSI. So they move in the same direction. However, when there is a difference in direction, if the price is showing higher highs, but the values of RSI is showing lower highs, then we have different type of movement, and then we say we have a divergence. Okay, also it occurs if the market trending to the downside and the oscillator is trending to the upside. This is something different than the normal, then we say that we have a divergence. Okay, so this is briefly what is a divergence. We have two types of divergences. We have the regular and the hidden one. Let's start with the regular divergence. A regular divergence indicates a potential of a reversal. So, how you can know that you might face a regular divergence? First case, if we are in an uptrend, and as you know, when we are in an uptrend, the market shows higher highs. Okay, however, if you see on the oscillator lower highs, that means there is a divergence. And since it is called as bearish divergence because the market is going to the upside and is showing higher highs, here we have lower highs, most probably the market will reverse and tumble. Okay, so this is our first case, which is the bearish divergence in a regular one. However, we have the bullish divergence. Okay, the bullish divergence occurs when the market is showing lower lows. However, the oscillator is showing higher lows. Then we have most probably a change in direction from a downtrend to an upward one. Okay, so there is a potential of a reversal. Let me give you some examples about the bullish and bearish regular divergence. So here we have the BTC USDT, down we have the RSI or the oscillator. As you can see, the market is showing higher highs. Okay, let me zoom in. So the market is showing higher highs here. Okay, higher high, higher high. If we look on the oscillator, we have lower highs. So we are facing a bearish regular divergence. So most probably after this movement here, we might see a reversal to the downside from an uptrend to a downward one. And this is what happened for BTC. After the bearish regular divergence, the market shifted direction from an uptrend to a downtrend. This is our first example. Now, let me show you the bullish regular divergence. Okay, if we look here, the market is posting lower lows. Okay, we have lower lows, lower lows. However, here the market is showing higher lows. Okay, if I take this trend line, so I have lower lows on the price of BTC. However, on the values of the RSI, we are seeing higher lows. You should match the bottoms of the prices to the values of oscillators. So you can see we have lower lows but higher lows on the oscillators. This shows a bullish regular divergence, and then the market shifted direction from a downtrend to a uptrend. Now we will discuss the hidden divergence. When this occurs, a hidden divergence occurs, or first, what it does signal, what is the indication that shows the hidden divergence? It is a continuation, it shows continuation of the trend. So it will help you to know when a certain trend will continue, as its name says. So if you see the market is showing lower highs, however, the oscillator or the RSI showing higher highs, we say that we have a hidden divergence. So first you should be in a downtrend and you will see lower highs, but if you look on the values of the oscillator and you are seeing higher highs, that means we have an oscillator, and this shows that the market will continue direction of the main trend, which is to the downside. This is the hidden bearish divergence. Now let's talk about the hidden bullish divergence. If you see on the prices of a certain asset higher highs, however, on the oscillator you are seeing, let's say, lower lows. Okay, if you are seeing first here, if you're seeing higher lows on the prices, that means we are in an uptrend. On the RSI, you are seeing lower lows. That means we have a bullish hidden divergence, and this lead to a movement in the same direction of the main trend to the upside. So it is a trend continuation signal. Let me give you an example about this to make things clear. So if we look at this part of the chart, okay, let me adjust this. Okay, here the market is showing, let me zoom in a little bit. Here the market is showing, if we look here, higher lows. Okay, the market is showing higher lows. We have higher lows. However, if I take the same part beginning from here, the market here is showing lower lows. Comparing this to this, higher lows. And even here, let's say, if you would like, adjust it like this, lower highs and lower lows. And since we are in an uptrend, what we should expect after this signal is a continuation of the main pattern to the upside. Now let me give you another example on a bearish hidden divergence, which is here. If we look here, we have the market is showing lower highs. Okay, the market is showing lower highs, but if I look on the oscillator, for sure I will take, or I match the peaks on the prices of the asset and the values of the oscillators. So the market is showing higher highs. Here we have lower highs. This is a hidden bearish divergence. We are in a downtrend. After it, we should expect a continuation of the main trend. The main trend is to the downside, so we should see another move to the downside. Okay, so this is a bearish hidden divergence. I know it was a heavy material, but it will help you a lot in your trading journey. So I will stop for now about this subject. Hope you will like it, and I'm sure you will benefit from such an indicator. Have a lovely day, and thanks for watching as always, and see you tomorrow with a different topic.